Have you ever thought about this? Before banks, before calculators, before Excel, how did people even know who owed what? Imagine a farmer trading grain for animals. No receipts, no apps, just memory. Now imagine doing that every day with dozens of people. Something was bound to go wrong. That problem is exactly where accounting and finance were born. Thousands of years ago, in ancient Mesopotamia, people started marking symbols on clay tablets, not to write stories, but to track grain, livestock, debts, and taxes. This wasn't about maths, it was about trust. Who paid, who didn't, who was growing richer, and who was quietly losing everything. In fact, historians believe accounting existed before formal writing because trade demanded records long before poetry did. As societies grew, things got messier. In ancient Egypt, scribes tracked royal taxes and audited temple wealth. In Greece, financial records helped manage city-states. In Rome, public money and military budgets were carefully documented. This was the first time accounting stopped being personal and became political. Fast forward to Renaissance Italy, and the real breakthrough happened. Merchants were running complex businesses across cities, and simple records weren't enough anymore. That's when the double entry system appeared, the idea that every transaction has two sides, one giving, one receiving. This system was formally described in 1494 by Luca Pacioli, and it changed business forever. Suddenly, errors were easier to spot, fraud was harder to hide, and businesses could actually understand whether they were winning or losing. Then came the Industrial Revolution. Factories expanded, railroads spread, and companies needed more than bookkeeping. They needed decision tools. Cost accounting, budgeting, and auditing emerged because guessing was no longer an option. One wrong estimate could collapse an entire operation. In the 20th century, paper turned digital. Computers, spreadsheets, and systems like SAP and Oracle allowed millions of transactions to be processed instantly, while global standards like IFRS made financial reports comparable across countries. Today, accounting and finance work alongside AI, algorithms, and real-time data. But here's the truth most people miss. Technology can process numbers. It still can't judge them. The core purpose hasn't changed in 7,000 years. Clear records, honest reporting, and smarter decisions. This is the Learning Studio, and this was episode 2 of our Accounting and Finance series. If you missed the first video, you'll find the full playlist linked below. In the next lesson, we'll break down the branches of accounting and finance, and which paths actually lead to real careers. Subscribe and continue the journey. I'll see you in the next video.